Phil, welcome to the podcast.
Thanks for having me.
First time on the Australian Business Podcast, I believe.
Yeah.
So you've appeared on the Australian Finance Podcast and a bunch of other shows that we run here at Rask, and you're always coming in as the kind of the heavy hitter when it comes to insurance.
Yeah.
So
I've put on a bit of weight, but thanks for noticing.
No, it's great to have you, mate, and always dressed to impress. So I feel like I made a joke before. As soon as you came into the office, it's like, you've got longer hair, I've got no hair. So it's like a tale of two business owners going in totally different directions. But mate, it's always good to catch up. You run the business Skye, S-K-Y-E. You do a lot of the insurance, whether that's life insurance, income protection, TPD, and other types of cover for our community. And you have done for a long time with you and the team. The business is growing well. I can see from the outside, you've got your own studio now.
Yeah. We're growing. We keep hiring any financial advisors out there listening. I know you're trying to grab some, but give us a call.
But you guys do so well at that. You do so well at recruiting. It's unreal.
Yeah, we've got a great team.
Yeah. How big is the team now?
So we've got 9 advisors and 45 in the team. We onboarded 5 people today.
5 people today?
Yeah.
So Peter, who's sitting here off the camera,
he's one of 5.
What? Wow. Yeah. Okay. So you got stuck with Phil, Peter. Okay. Well, good luck with that, mate. But that's great to see you're growing, mate. And it's I think it's testament. Like, I think a lot of people in the finance space that run other finance businesses look at Skye and are like, it's really cool the work that you guys are doing and how you've gone about it too. So that's a whole other conversation. Happy to dive deep for anyone that's interested on what it takes to scale a services-based business in a highly regulated one as well. But today we're talking about insurance for business owners. And this could be, imagine, Phil, that you're talking to someone that has employees, but it could also be someone that's on that entrepreneurial journey. Maybe they're sole trader or contractor now, and they're going to go in that direction. We'll try and tailor it to people that have a little bit more of an established business because we've been asked by the community a few times for this. So I guess at the highest level, let's start at the basics. Why insure? Let's talk about, if you can answer that question through the lens of a business owner. Yeah.
So, I mean, some of the insurances we'll talk about are the general insurance. Some of them are like required. Yep. So why insure? Because I have to, government tells me to, or industry bodies tell me to. But personal insurance and the life insurance bracket is really, do you have something to protect? Like, do you have, if something was to happen to you, is there a big impact on someone in your life, or is there a big impact on your team? They're really the important things. Like, I know for me, if I was to pass away, it has a big impact on my 3 girls and my wife. And so that's why I insure myself.
Yep. Love it. So in a business, I feel like there are things that we'll touch on today. Things like a lot of the business owners that listen to the show are the key person or one of the key people in their business. There's the liabilities, which you mentioned, like family, and the repercussions
Not all family is a liability, but
no, that is true. But there is the liability on the family that may happen as a result of you going down, or me going down, or a business partner going down. There's the continuity of the business as well. And then there are, obviously, which you mentioned, some of the legal reasons. Some of these things you just have to have. So that's really important. Now, I'm going to ask this question, which is, what is the process of insurance, like getting insurance? Because, and there'll be differences. So I'm just asking you just to explain at a high level, generally speaking, the process of someone going from, I don't have enough insurance, to I've got an appropriate level of insurance.
Yeah, just like all insurance types, you generally have to go through some underwriting. So if you've got professional indemnity, they'll underwrite the business risk and determine how much the premiums will be. That's the same in the life insurance space that we work in. So there'll be underwriting. So because the life insurance, it's based off your health and your ability to work, based on your health, illness, sickness, they will underwrite your individual health. So when it comes to like a life insurance policy, how likely are you to pass away? And, how risky is your occupation? What gender are you? And because that'll have a difference in the risk profile.
Yeah, right. Okay, so you go through that process, collect information, you basically package that up. I guess you as a financial advisor doing this on behalf of people, you package that up, or a broker if it's some esoteric business type of insurance, packages it up and then hands it to the insurer for assessment.
Yeah, that's right. Yeah. In our space, it's quoted based on the known risk factors, occupation, gender, age. All of those are are quoted based on those known risk factors. And then when we apply for the cover, they'll do a health risk assessment. And then they may charge a high premium, which is called a loading in our space, based on those known risk factors, but based on your individual risk factor, we're going to charge you a loading. They may put an exclusion on the policy. So, hey, for mental health claims, we won't pay you a claim. It's excluded from the policy. Or they may decline the policy outright for a number of reasons.
Yep, makes sense. So business owners in particular, just not only do we have the life insurances, which we will talk about in depth in a moment, then we have like the standard, this is Phil's life, car insurance, and all those general insurances for the home or whatever. Maybe you got like engagement ring insurance, whatever, you know. Then there's this whole suite of business type insurance. It seems like there's like more insurance than you can poke a stick at. If we just zoom in onto the business owner stuff generally, so not just life, but just generally speaking, before we get into life, what would be some of the examples of insurances people should at least have considered?
So, I mean, things that like public liability is a pretty common one.
Yep.
Professional indemnity. We're both comparing our professional indemnity bills before.
Yep.
What else have we got? Like work cover. We need to have work cover, and that's legislated that we have to have it if we've got employees. And that's an insurance policy for our employees if they injure themselves at work. And it protects our business to make sure that, hey, we need to be doing the right thing by our team to have a safe work environment, and they've got some insurance cover in place.
The other ones that you mentioned to me off air, one of them was like industry specific things. Like we were talking about, our PI is like specific to our industry. Like we're required to have that. I know accountants have a different one. Builders have, everyone's heard about the builders insurance.
Yeah.
There's so many different ones.
Like audit insurance. If your accountant wants you to get audit insurance, so if you get audited by the ATO, then you have some funding mechanism for that. So whether you take it up or not is another thing, but there's insurance for almost anything.
Almost anything, yeah. And these are all things that every business owner should consider if you do, one, legally need it, and two, is probably the next hurdle is should you have it? And then, you know, from there on, it's, it's up to you. So, there's actually some other thing is if you do have car insurance, you probably need car insurance for your business as well.
If you've got a fleet of cars, you obviously need to package that up and likely going through a broker if you've got a fleet of cars.
Yeah. So the ones that we want to zoom into today, and the ones that I was keen to get you on the show for, given it's your expertise, it's Skye, and in particular Skye Private, which is a new brand. I'll let you explain it in a second, that can deal with individuals who are coming to you when in a I don't know how you frame it, but like what's the difference between Skye Private versus Skye Wealth?
Yeah, so Skye Wealth is our core business, and it works really well where we put a bit of work on our clients to complete online forms and to help us through the process, and that's how we keep our costs low. Is to have that kind of balance between we will do a lot of the heavy lifting, but we do also have an expectation that you will take on a bit of that role. And it works really well because we've got great processes in our business, and we can work with 1,000 clients a year, helping them get insurance. And we're fairly unique in the market. There's not many advisors who can take on that much volume. Now, what wasn't working for us is if anyone sit outside the box and needed a bit more hand-holding, or the advice was a little bit more complex. And so the types of clients are really, we've got expats, so we've got an insurance offering for expats. So anyone living overseas, they're slightly more complicated because the rules are different from the insurer's point of view. Things like self-managed super funds, there's a bit more complexity because you've got multiple trustees of the self-managed super fund, and there's a bit more complexity. Defined benefits, if you don't know what that is, you don't ever need to know. But if you do know and you've got one, they're more complex. And then business owners, are you a sole trader, and do we need to get you covered? How much of your income is like in your profit and loss? How much is depreciation that is real income? How much of your personal expenses are going through the business that actually is real income?
Yeah.
People who are self-employed on a sole trader, but also if you've got a big team, like is there any passive income on that business? Will you likely cover your income for 6 months if you can't actually go to work because you've got multiple business owners? Do we need some buy-sell cover? All of those things have a lot more higher complexity. And so we've launched this other brand, Skye Private, just to really hold our clients' hands through the process and a bit more of a bespoke model.
Yeah. That makes a lot of sense. And I went through the Skye process before you'd launched that, but I feel like now I would go in that one.
100%. Yeah, you would. Yeah.
Need more hand-holding.
And busy self-employed clients who don't get back to emails generally benefit from it.
Yeah, true. And it's true. I definitely would. Okay, so if we talk about like specifics, I want to talk about the income protection, TPD, life, trauma, and child's cover, which we have covered in other episodes in the past. We did a deep dive, a mini series actually, a whole suite of podcast episodes devoted to insurance. But then I want to talk a little bit about key person and what that means, and the buy-sell stuff, which is relevant to a lot of business owners. So let's just start at the top. We've got life products. We've got income protection. As a business owner, like, or even if we're trying to influence our team to get insurance, like, hey, go get insurance because, it's probably a good idea for you. Go see someone. What is income protection and why would I need it?
Yeah, so income protection is, it covers a percentage of your income if you're unable to work because of an illness, injury, or sickness. So if you just decide to shut down the business, you don't get paid income protection. It's really if you're unable to work for health reasons. Now, when it comes to self-employed, it is much more nuanced. The income protection policies that are on sale today, if you're setting up a new one, there are things that like passive income offsets. There are things in a contract where if you have significant amount of profit in the business and there's multiple business owners, the level of cover you can insure may be different. If you have losses in your business, you may actually not be eligible to set up an income protection policy. So there are lots of kind of nuances that it's really important. If you're self-employed, 100% engage a financial advisor to set up these policies, because you may go to a Australian super and say, hey, I want, $5,000 a month or $10,000 a month, and they'll set it up. But at claim time, they'll look at the business and say, well, hey, your income splitting. So, your income's only 30 grand a year. So we're only going to pay you based on 30 grand a year because that's your taxable income. So self-employed is very important to speak to a financial advisor who understands the policies, because there's a lot of nuances about not only just setting it up, but claim time as well. Are there any offsets based on profits or whatever?
The thing that blew my mind, which I don't know if you told me or another financial advisor told me, is that you can pay for a policy. So you can pay for insurance, but not know that, like, until you get to the end, that you weren't covered for something that you thought you were covered for, which I feel like if you think about it, if you pay for something for so long, you kind of run on this basis that, I'm good. But then you get there and you're like, holy, what did I just pay for 10 years, right? That freaks people out.
So I'll give you an example of that, to make it real. So if you've got an income protection policy that you've just set up and you're able to get a certain level of cover, but in your business, you've made losses in the last 2 years, and your loss, your paper loss is more than your actual salary that you're taking. So you earn $100,000 in salary and wages as an owner, but then there's $100,000 loss. The insurance provider will say, well, there's no income to protect. So therefore, we're not paying you your income protection, because income protection is based on, at the time of claim, what was your income that we are protecting, and they will pay you the lesser of either the benefit amount or your pre-disability income. So there's things like that you may, and we've previously had a client have this where they didn't get their income protection policy because of those offsets and the complexity of an income protection policy. Now, I wasn't the one that set it up, and so we had to just deal with the claim situation. But there's a lot of nuances when it comes to income protection specifically. The lump sum covers are generally much more simple. So those are things like TPD, which I'll get you to explain what that means, and life. So again, for business owners, talk us through these. Yeah, so life insurance is if you die or if you're terminally ill, there's a lump sum payment that gets paid out to your beneficiary. So normally a spouse or the will, you can assign it to the will. TPD is a total permanent disability. So if you're totally permanently disabled, you can't return to work again, then you'll get paid out a lump sum payment. And that'll either go to the super fund if the super fund owns a policy, or to go to your bank account, and you'll have that money. And that's just to fund, your life for the rest of your life, because you can't go back to work.
I feel like that money going to the individual for business owners may make more sense in many circumstances, because if, say, for example, I walk outside, get hit by a bus, the business is going to be shocked from that. Like, our business is not a huge business, right? We don't have that many redundancies in place. The business would be shocked. And then if the money went from my TPD cover to Australian Super, then that's like an extra step that we need to contend with before the business has availability of those funds that then can support the business to make decisions.
Well, yes. And we'll touch on ownership, because there are things like, if that TPD benefit was for your personal situation, then maybe that's okay. Number one. Number two, there is tax. If it goes into your super fund and you pull the whole money out, there's tax on that. So you do get tax on a when you're pulling the money out of the super fund. So there's those considerations as well that you've got to factor in and think about. But if as a business owner, you're setting up a disability policy, and it's really for the purpose of like business continuation for 2 years while you try and sell the business or bring someone else in to manage the business. Yes, you'd want to own that personally, because you don't want to, the tax difference. And it's just easy, quick. It's in your bank account.
Yeah. So the structuring of where the policy, like who pays the policy or who holds the policy, is really important.
Yeah,
right?
yeah. The ownership's super important.
You actually did a video on your YouTube, the Skye YouTube channel, where it was your daughter, and you asked her if she would want how much?
Yeah, $4.5 million between mine and my wife's cover, or if she wants the money or she wants us to be alive.
And she chose?
She's incredibly pragmatic and wise. She said, if it was now, I'd choose you guys. If it's in 20 years' time, give me the money, because I'm out of home. I don't need you anymore.
Okay.
Yeah.
So you obviously insure yourself, because this is what you do for a profession. So you have contingencies in place that if, say, you run the business, your partner, if you got a payment that you'd want, you're mindful, I'm guessing, that the business would have some sort of, like, there would be an effect or an impact on the business.
Yeah.
At the same time, you would be going down, which is an emotional thing, while also there may be financial considerations immediately, but in the long term, right?
Yeah, exactly. Yeah. So the way I think about it, and $4.5 million is between both of us. And the reason we structure it, like, if we both died, that's a lot of money. That's more money than our kids will ever need from a life insurance. But if I passed away, then my wife needs to fund that. If my wife passes away, we need money there to live without her. So, we think about, and I'm actually about to increase my life insurance policy as well, because I don't feel like I'm adequately insured to cover. I just think about, can we have a individual policy that I fund like 6 to 12 months of payroll? And how do we think about that? And the business would continue, and there'd be, revenue still being generated, but I just want enough money so payroll's sorted for 12 months. So, because, imagine if you passed away, like, what happens to the team? You got to think about, everyone's going to just leave. Yeah. Like, quick, they've got to, like, there's a lot of uncertainty. We don't know. But if that happened to me and Kate stood in and just said, I have no idea what I'm doing. She doesn't work in the business. I don't know what's going on, but I know there's an insurance policy that's covering payroll for 12 months. Let's work this out. We've got some breathing space. That's important for the business.
Yeah, for sure. And then it's also important because the smoother that transition could be, if she decided to sell the business, or there was like staff bought it or whatever, then it would give a runway to that, right?
Yeah, you're protecting that asset. Like as all business owners, if you didn't have a buy-sell agreement, which we can touch on that, what that looks like, how that looks. If there was no buy-sell agreement, you've still got that asset there that is, a lot of, people who are self-employed, that is their retirement savings. That is their wealth, goals is tied up in that asset, their business. And so if I was to pass away and, team members would naturally probably leave, and we'd still have clients we'd need to work through, and all of that mess if there was no kind of funding to go 12 months of salaries covered, because people would end up leaving, and then the value of the business would reduce significantly.
Yeah, absolutely. So the next one that I wanted to cover off is trauma, and how is that different to TPD?
Yeah, so trauma is a lump sum payment for defined medical events. So cancer, heart attack, strokes are the big three. So if you have cancer, you're unlikely to be totally and permanently disabled. Now, it may lead to a life insurance policy being paid out if you don't survive the cancer, but it just gives you a lump sum payment to fund those bills. And really, the way we think about it at Skye is just gives us the opportunity for, if you've got a partner, for the partner to take time off work and just not focus on, how do we pay the bills? Because I've lost my income, and yes, I've got income protection to cover some of it, but it doesn't cover 100% of the income. And we've got new bills now. And so that's really what trauma covers, those three main, it covers 30 odd conditions, but the three big ones that are the most claimed on is cancers, heart attacks, and strokes.
Yep. Okay. Child's cover. So for little ones in your life, we won't have to spend a huge amount of time on this because it's not always relevant for business owners per se, but just broadly, what is it?
It's just a life insurance policy over the child and a mini trauma policy. So it's like 8 or 10 conditions as well on that policy. Okay,
great. So that's for parents or anyone that's listening that thinks that would be a significant impact, and it probably has ripple effects through many people's lives in a lot of different ways, including on your business. The two final areas that I wanted to spend a bit of time on is key person. So I would say you're a key person in your business. I would say, dare I say it, I'm probably a key person in mine. What does this look like from an insurance perspective?
Yeah, so key person is really the idea of how do we protect the business if something happened to the key person. So there are a few different insurance policies. There is a business expense policy, which is kind of like a mini income protection for the business. Generally only lasts for like 12 months. And so it means if there's extra cost in the business because of that loss of that key person, then there is some funding there for that. But majority of it is really about key person for the business if something significant was to happen. So if someone was to pass away or become totally and permanently disabled, we've got a key person. The intent is to cover the key person, but the actual policies is a life insurance policy. It's a TPD policy. So in that situation before when you were talking, I was saying it depends on the intent. So you may hold an individual policy where it may be paid through your super fund because that's a long-term, you may just take a pension from your super fund if you were totally disabled to cover your own living expenses. But a TPD policy may be funding the impact on the business based on a key person being totally and permanently disabled.
That makes sense. So I know this is a general question and the answer would probably be it depends, but is that expense, like if the intent is to cover expenses, is that typically quite expensive, would you say?
So the business expense covers? It's not crazy expensive. Yeah.
Is that something you guys do?
Yeah, we can set it up. Yeah, it's not that popular. A lot of insurers have moved out of that space, so it's less insurers in the market for it because, as I was saying, income protection is quite complicated for self-employed and business owners in terms of a claim. Business expense can be a little bit more complicated. Right. What we normally do see is that key person cover from a life and disability, so real significant impacts.
Yeah. Okay. The other thing which you mentioned, which is probably the final big thing I really wanted to talk to you about, is the idea of buy-sell and the implications for business partners and people that run businesses that have a liability that may even not be them and maybe someone else, or it's set up in some way. We've got a lot of people that listen to the show that are in this camp. Some of our business, some of our podcast hosts are in this scenario as well. So can you talk to us about this, how you see it in practice?
Yeah, so a buy-sell is really like an agreement. Like let's say we're in business together. We own 50% of Skye each. Now, if I was to pass away, I've just gifted you that. If I pass away, then you'll be in business with my wife because she'll own my share of Skye. Yep. And same with you. Now, do you want to be in business with my wife? Because we're in business and Kate's never been in the business. She doesn't understand how the business works. That's probably not an ideal situation for you. And it's not an ideal situation for Kate because let's say the business is worth $1 million. You've got to find $500,000 to pay Kate out. And so how do we actually do that? You can insure that scenario. So a buy-sell agreement basically triggers the sale of that asset. So if I pass away, that triggers the sale of the shares to you. So you own 100% of the Skye from then on. And that insurance policy that is being funded by the business gets paid out to Kate for that $500,000 asset. And so Kate gets made whole in terms of her ownership of the business, and you get to own 100% of the business moving forward, and you're not stuck with a spouse or an estate owning 50% of your business.
And the kids of whatever, who knows where it goes.
Yeah, I mean, who knows who will end up owning the assets, but you can't force your business partner to sell their assets or the estate to sell the business to you, and you also may not have the funding for it. I don't wake up with $500,000 in my back pocket or 50% of my business valuation.
Yeah. So in that, the business owns the policy?
Or ownership is different because you want to own the policy personally for tax reasons. Now, if you're going through this process, speak to your accountant. Your accountant will give you tax advice. I'm not a tax accountant. But it's a good idea to own the policies personally, and you just fund it. So the business will just pay and gross up for tax to fund each policy. So you and me, if we had a 20-year gap, which is also pretty common in business, and I'm 20 years older, my premiums would be higher.
Yep.
But the reason why the younger business owner wants to fund that is because the business owner who's 20 years older is more likely to pass away. And so the younger business partner wants the insurance policy.
So they're happy for the business to compensate.
Yeah, exactly. Yeah, maybe 3 times or 4 times the cost of my individual policy.
So the other question that I have that falls out of this is what happens as the business and like the valuation of the business changes? So obviously there's like the legal agreement between the business partners or whoever.
Yeah, which is incredibly important because you don't want to fund an insurance policy without the actual agreement being triggered.
Yeah, exactly. So there's that, you have to work with like a lawyer or something in that. But what happens if, like, say, go back to your example of us being joint owners of Skye, in 5 years, Skye's like 5 times the size.
Yeah.
Does that mean that I have to continually update these types of things?
Yeah, we do need to review the policies over time. And so, and again, let's say it's worth $5 million in 5 years' time. We may have a $500,000 insurance policy. And so it's important to trigger that sale of the asset, but maybe you'd come up with the extra $2 million or maybe it becomes unfunded. So you do want to review it over time because generally buy-sell agreements will have a calculation built in normally. Sometimes it's fair market value, but sometimes it'll be X times profit
revenue.
Whatever the valuation methodology is used. And you want to try and make sure you're checking in every year to go, hey, do we still have enough cover? Do we have too much? To make sure that you are adjusting the policies over time.
That makes a lot of sense.
And you can cap out, like if Skye becomes a $50 million business, we're not getting a $25 million policy each because the insurers just won't fund that.
It's already $50 million, isn't it?
That would be nice. We're not Rask. It's
yeah. Sure. Okay, great. So it's obvious that for this type of thing, it kind of requires a specialist. I know we've had a partnership for quite a while now between Rask and Skye. If someone's going to go through this process, can you tell us, maybe just tell us from the Skye Private perspective, what does it look like in terms of getting the insurance sorted? Like, what is the process you would follow? If someone's listening to this, like, I'll go have a conversation. I want to sort this out with me and my business partner, whatever the case may be. What would they expect from you?
Yeah. So it's really important to know, are you looking at just getting a buy-sell agreement funded? Because we can do that, and there are a lot of the similar processes, but we like to make sure your personal cover is sorted out as well. Because if you've got this business worth $500,000, well, you actually probably don't need $500,000 worth of cover in your personal name because you've already got that funding for your personal name. So it's really important, and I encourage a lot of people to do your personal insurance for you and your partner, as well as the buy sell at the same time. But when they come to us, they book in a phone call, skyeprivate.com.au, book in a phone call, and we just get a good sense what it's like, what is actually required, what's the business entity, how many partners. Like, every business is different and structured quite differently. But we have to get the same health questions. So we ask 1 million health questions because we still need to do a medical pre-assessment, whether it's for just your personal or just your business or both. We've got to make sure we do a lot of that due diligence and research, but we charge a fee up front for our advice, and then we go ahead and provide advice, again, with the key person cover. Sometimes it's multiple different advice documents for you and your partner, and then so you and your life partner, if you're getting personal, and then you and your business partner, and your business partner may be getting personal cover as well. But we charge a fee. They fill in a massive online form with 1 million questions about the health, and then and another form about the business.
So that would have things like, I'm assuming, things like maybe financials, like a printout from Xero or the ATO or something like that.
Yeah, financials, how much of the wages bills is associated to the directors if they are taking wages. We just want a real deep dive on the financials, because every business will run their financials differently. Some may just take directors' fees, some may pay wages,
distributions, whatever. Yeah,
there's a whole bunch of nuances there.
Within that, you'd probably have like the ownership structure, I'm assuming.
Exactly.
You want to know how much, who owns what and whatever.
Exactly. If there's a 10% ownership share, well, we want to fund that 10% on their lives. If there's a 50%, we need to know that. So all of that detail on the business is super important when we're funding a buy sell, and also getting the buy sell as well. You don't want to get a buy sell and not fund it, and you don't want to fund a buy sell without getting the buy sell, because they're both they work hand in hand. They're really important to both get.
Well, if you have a buy sell without an insurance mechanism, you're on the hook.
Yeah.
For a lot of money, probably.
Yeah, exactly. Yeah. So and that's it. And at the end of the day, in that example, $500,000, at the end of the day, you are on the hook if your business partner passes away, either on the hook that you're going to be in business with my wife, or you're going to be in business to fund pay her out. And my wife may look at the business and say, actually, you know what, Owen? I know we said it. I know it's $1 million, but I actually think it's worth $2 million. Can you give me $1 million?
Yeah. Or,
hey, we need to. I know we weren't paying much dividends, but we need to pay 100% of the profits needs to be paid out as dividends. Like, we can all, sit here and be friends and hug and kiss, but at the end of the day, when you've got a business partner that comes in, they may have a different view of the business, and they also may have a requirement for the income. Like, we can all say that all the bad things, but Kate may come in and go, we actually need the money. I need 100% of the profits paid out, or I need you to fund me out of this business.
Yeah.
And so that's why, when you are in partnership, it's, we all hope sunshine and rainbows, but you got to protect the downside. And being in business with another person is like being married. How do you protect the downside of someone passing away?
Yeah, absolutely. So if anyone's listening to this, you can reach out to skyeprivate.com.au. There's also a link in your podcast player. Also, another thing, just to shout out to business owners, is you can talk to your employees and your staff about getting the appropriate level of insurance. You can also talk to Skye about that if you want to. It's something that we encourage everyone here at Rask to do, is to go through the Skye process as well. So, mate, always a pleasure. Thanks for joining me.
No, thanks for having me.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.